Shall we do that just like so everyone knows who everyone is, or does everyone here know who everyone is?
I think everybody already knows everybody else.
Yeah.
Chris Kitze, Alphabit Fund, and Flashcoin.
Jaron, Lukasiewicz, Influential Capital. I also started one of the first Bitcoin exchanges in the US in 2012.
Mark Jeffrey, CEO and co-founder of Guardian Circle and the Guard Token, global decentralized 911 emergency response.
And I'm Richard Titus, founder of ARC and also Razorfish and 19 other companies. I'm not going to go on that back. So this has been an interesting 2 years because 2 years ago I remember Brock explaining Mastercoin to me very late on my birthday party. I think you were actually there. And I said, this doesn't really feel real, but I kind of thought it was interesting. It actually made me pay a lot of attention to Ethereum, so thank you for that. 2 years later, you have, I would say, 3 divergent views. One is that the ICO and tokenization is over, and we should all go back to the old way of doing things with iBanking and fundraising and venture capital. One thesis is that everything that can be tokenized will be. And then there seem to be some more nuanced views of where we are in the market and how companies can raise money. And I'd like to just hear your opinion. Like, you know, where do you see the market today? Give me like a 1 minute each, and then we'll sort of start some dialogue and negotiation.
So from Alphabet's point of view, we see huge deal flow. We see probably 500 or 1,000 deals a month that come through, and you know, we may end up investing in only a handful. That's it. So the things that we're seeing, the trends that we're seeing right now, ICOs for most intents and purposes are pretty much dead. You know, they got a bad name. They started out sounding like an IPO, and then they attracted the wrong kind of attention. So you know, they're now basically under lockdown, and people, of course, still have the same need, which is that they have ideas and they need to raise capital. So people, of course, will find a way to do that. So one way to do it is to sell equity in a company, sell equity in the company, and then also issue a token. And the token can be something that's given away. I mean, Marco laid it out very well, I think. You know, there are a number of, he didn't call it a loophole, I called it a loophole. He said it's not a loophole, it's actually just a legal principle, which is when something starts out and it has no value, it is not money transmission. When something starts out and it's not based on a security and it's based on some other usage, it's not a security. So I think what you really have is you're dividing it between the security, which is pretty clear. People want equity, investors want protections, and the utility of a token that is free range.
Yeah, we're in a transitionary phase right now. I think we all know that. I got pretty deep into ICOs and definitely was you know, a big proponent of them as they were coming out. And I think as we are coming on the other side, totally agree that ICO is a terrible way to raise capital right now. And I am advising people to not go that route, and we've moved our entire company into STOs. One point that I think is really important as people look at 2 token models is remembering that if you're issuing a utility token and a value expectation as part of that, make sure you actually have a good token model. So if you are incorporating that, utility tokens need to have real value on their own merit, and most of the models don't. So you know, I'll keep it short and not go too much into why I've become bearish on utility tokens, but it comes down to all of the good models are securities and they're impossible to understand. And with that, I think that even people in the community are a little exhausted of trying to learn about this really complex token model and are moving by and large into STOs.
So I have a utility token. It's kind of different from a lot of other folks in that we're based on NEO, which is a Chinese coin. And we live in the world of EOS and Ethereum mostly, and we're weird because we're NEO. I was recently in Tbilisi, Georgia, with all the other NEO people, a lot of the NEO CEOs and the senior management. And several of the big NEO companies are just now going out for their ICOs, and they're working. So I think it depends on where you are. I would say it's not what it was, even there in Tbilisi, but it's not nearly as dead as it feels here in this room. You know, so very different vibe there. The other thing I'll say is, you know, look, we've all been around for a little while. We were there during the dot-com boom and the crash. It was all about B2C before the crash, and then the crash happened, and everyone was like, oh, it's all about B2B and blah, 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 and vertical net, la, 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 la. And actually, the right thing to do at that time was to found Facebook and to do all the great consumer companies that were founded in that trowel. So I think we're sort of having an insane moment right now where we're saying, oh my God, it's all about security tokens, and that's the only thing that can work, and utility tokens are dead. And I think the reality is the utility tokens will come back stronger, but much better thought out and much better curated. But that's a few years out in the future.
So everyone should check out Brock or my social media feeds. Brock shared a fantastic blog piece this morning. He actually didn't write it, but it was fantastic. It said, cryptocurrencies are dead, and then it went through and listed sort of all the buy signs of big institutional moves into the space. And living in Silicon Valley, I can tell you that every venture capitalist I know, every founder I know, every meetup or codathon is around the blockchain. I mean, I meet founders, and 9 out of 10 of them are focused on blockchain. And that is actually the signal to me that matters. What I'm interested, though, is this conversation always turns into a very polarized security token or utility token, as if the whole universe is those two asset classes. But actually, there's a third one that Olga, who I bumped into last night, is very focused on, which is asset-based tokens. And so I'm curious, is this really a totally different thing, or is this just the natural iterative biological evolution of an asset class into the sort of more complex instruments that have value and give investors value and entrepreneurs value, capital to raise and build businesses?
Well, what you're talking about are payment instruments.
Right.
And
Some of them.
Yeah, some of them. The asset-backed, if they're based on any kind of fiat, if they're based on things like gold, they're probably going to be deemed to be a security.
Yep.
And similar to what, for example, the GLD ETF is structured like, where you have a custodian, you have a trustee, and you have a 50-page contract. Authorized participants. So what you start to do is you winnow out the marketplace. People can kind of own it, but they can't really hold it. They can't redeem it. Only the authorized participants, aka the big banks.
Sounds like the dollar.
Right. It's a business model, and it's been quite frankly the most profitable business model in the history of the world. And that's why we're here, is because everyone sees that kind of business model with crypto coming and kind of upsetting the apple cart and taking that power from the authorized participant and putting it in your iPhone. That's really what's happening. So, but back to the tokens, each one of these, it is an ecosystem, and each one of these will have its own biological birth, life, and death. Yep.
I'm curious, let's jump to a slightly different topic. Why do you think non-security tokens, utility tokens, were so successful, and why have security tokens been a little slow off the ramps, is my question to you.
It's a very good question. Utility tokens were original. So, we're in a lot of the theories that people have been using as valuation models come from monetary valuation theories, and it just opened up a whole new level of creativity. And one of the positives about ICOs is that if you do believe that securities laws are highly restricted, and I say this as someone who just submitted an application to FINRA for a broker-dealer, if you believe that security laws are extremely restrictive globally, looking at a decentralized asset that's along the lines of Bitcoin and Ethereum and other cryptocurrencies that are truly global in nature and can't be stopped, utility tokens are extremely interesting. The challenge is if you're an entrepreneur doing a utility token offering that's just immensely risky. And as a broker-dealer, I mean, there's a reason why Reg A Plus applications for utility tokens haven't been approved and aren't going to be. So I'm coming from the standpoint of someone who's an entrepreneur in the space and looking at how do I manage my risk profile on regulatory stuff, which frankly is pretty low. So utility tokens have all these benefits, but people are looking at the pain points and they're saying security tokens are where it's at. Problem with security tokens is that you're moving back into equity, debt, preferred equity, or asset backed, and so people are saying, where's the real innovation here? And I've spent the last 2 months speaking to 50 plus funds in the space, really trying to answer this. My view is that you can implement certain aspects of a utility token that, or let's call it an ICO, that were very positive, building communities. Let's just start at that. And Airbnb right now is petitioning the SEC to open this up themselves. And I think that security tokens are a perfect fit here if you're trying to incentivize a global community of people with common technology. So I think for Series B,
Facebook too.
Yes, that's right.
Facebook too.
So I think that, you know, this is all part of a common trend, and the technology is going to fit, and for companies who are at Series B, C, D stage company who want to expand globally, it's going to turn out to be a really interesting way to fund that.
So Mark, this is really interesting. So everything he just said, I agree with. I'm actually studying for my Series 7. We've been looking at doing a BD as well. But it's a very American-centric view. And I'm curious, as an American CEO running a company on a Chinese blockchain with a global audience, much of it actually, I'm an investor, full disclosure, in emerging markets. What do you think about all this?
Well, I mean, utility tokens are something we all have on our phones, right? And Fred Krueger and I had this sort of discussion on Facebook recently.
That's actually why. That's exactly where I was going.
So, and basically, Fred asked the question. He said, "Hey, so has anyone actually seen a security token? You know, who can send one to me right now?" And nobody could send him one. Nobody could show him one. And let alone, I mean, the big advantage of this is, if security tokens, is that they're liquid, right? Supposedly. So unlike stock that you buy in a company, you're locked up for 7 to 10 years. Well, a security token, you could just trade it somewhere. You can't trade it anywhere. Where can you trade it? So all these things are very theoretical. We don't know if this is going to work. So whereas utility tokens are based on, you know, it really comes out of gaming, right? So a +10 sword in World of Warcraft, you know, abstracted, that is a utility token, right? That's an in-world digital good. Same thing. So
in my defense, I tried to send him a science token, but it was locked.
Right. So there you go.
And actually, I have multiple security tokens. I also have 22X, which we issued this week. But again, it was locked. So let's talk a bit about equity. You know, so it's funny. I always say, you know, meet the new boss, same as the old boss. So I founded 17 companies in my life. All of them funded, with one exception, with pure old equity. Always there was a new creative instrument. You know, it was discounted convertible note, straight shares, valuation. But you know, essentially, I was selling a piece of my future enterprise for money today, AKA a hamburger. Are you guys doing equity deals? Do you still see those? Are you doing any of these sort of more complex instruments? You know, Chris, let's talk about that a bit.
Yeah, we do all of the above. I mean, but our focus is on the tokens, and I think the real point here with the security tokens is there's no current market for security tokens. Yeah. You guys both talked about it. It's true. You look at the number of exchanges. I mean, hopefully by the end of the year there will be some exchanges. But then you have all kinds of restrictions. I mean, what people loved about ICOs was you go hand this entrepreneur, you send them some Ethereum, some Bitcoins, and a couple months later, some tokens show up in your wallet. You're like, wow, I just got some tokens. And then about a week later, it shows up on Bittrex, and you're out there hitting the bid and getting some monetization. And I mean, it's like, it's a beautiful thing. The biggest problem with private equity, and I've been a private equity investor for 25 years, is liquidity. That is the number one problem. And how is it that how can we open up this market? The reason why the dot-com crash happened, and I lived through it, I'm one of the people who, you know, you talk to Michael about it, he'll tell you all the stories that we were involved with. What ended up happening is SEC put the brakes on it because it's credit creation, okay? What this really does is it unlocks the credit creation process from the big banks and puts it in the hands of someone's iPhone. That's what we're talking about here. Now, why did they not like it? Well, because all of a sudden anyone can create their own credit. Yeah. You listen to Neil Kashkar from the Federal Reserve in Minneapolis. He will tell you they like Bitcoin. They don't like the fact that anyone can make their own coin. But that is the power of what we're talking about here, is the ability to make your own coin, create your own credit.
And a deflationary versus inflationary monetary supply.
I love that point, and it echoes the sentiment that I'm really feeling, which is that banks and broker-dealers should never hold people's money. And that's something that actually was a little sad to see.
How about exchanges?
Exactly. Yeah. Exchanges fit right in there, too.
Yeah.
but I think it takes everyone in this room to really be pushing companies that you see in the space to move towards back into decentralized smart contracts. If you look at a lot of what's being done in the security token space, we're at a very strong inflection point where the major protocols are going to be making decisions around, do we promote centralized custody, and do we promote, and what are the solutions looking like? And if people are raising capital and a broker-dealer's helping them with that through a mini-max offering, is the broker-dealer custodying funds, is the entity custodying funds, or is the issuer, or is a decentralized smart contract doing it? And hopefully we can move towards a world that can actually protect consumers, not needing regulators to do it.
Right.
You know, Airbnb is nothing without its hosts. Uber is nothing without its drivers. Both of those companies recently asked the SEC for a mechanism to give their ecosystem participants stock. Stock is the wrong option. Stock is messy. Stock is reserved for special people, accredited people, at least in the early stages. So I just don't believe it's ever going to really work in the same way that crowdfunding didn't really ever work. Right. So whereas utility tokens, if they had existed when Uber was funded and they had paid their drivers partially at least in Uber tokens, those early drivers who made Uber happen, who did the heavy lifting in San Francisco in the early days, they would have been rewarded. They could have had the outsized rewards of an employee that they could have gotten had there been a mechanism that was equivalent of that in the equity world, which there isn't and never will be. So we want this kind of world where loosely coupled ecosystem participants in the early days can reap outsized rewards to encourage the growth and building of these new networks.
So this is interesting, right? Because one of the things at Razorfish, which I founded, we used to talk about, is that our assets came to work every day and left every day. And anyone who's been in a startup knows that the distribution of wealth and participation in that startup venture is very unequal. Yeah. You know, the receptionist does much better than the BD guy who landed the $10 million that got the company to go public. And yet, it doesn't work right now. And so I think there is something in a decentralized token that works there. However, my problem with a lot of what I've seen in the sort of Series B, Series C tokenized offerings is that they're mostly phantom stock without any participation in the ongoing thing. So you have all sellers and no buyers. And so that's the part where equity does give you some sort of backing, so there's a desire to own something. It's like Berkshire A, Berkshire B. So my question is, how do you create something that has that simple liquidity and doesn't require me to do KYC 6 times every 6 months, but still retain some asset value so that the people you're trying to reward actually get something out of it? I'll start with Mark first, and we'll go back this way.
Well, I can tell you, we have a utility token, and our intent is that our early ecosystem participants, our early citizen responders, will in some fashion reap outsized rewards with that utility token. That is our intent. We are also, at this moment, we're not doing a security token. We're just doing a convertible note equity. So that's it. So you can own a piece of the company, and that's, there's nothing wrong with that. I'm not against that. That's actually quite good.
And are you offering your existing token investors some sort of advantage in investing in the equity round? Is that a thing you've considered?
No, they're separate things.
Cool.
So, although there is a lot of crossover between people who hold the tokens and the people we're talking to.
What about you?
My experience has been that most entrepreneurs are not good economists. And when I try to explain to them that your utility token that is a pure cryptocurrency in your ecosystem and nothing more, and it has a revolving exchange rate around your platform that's priced in dollars, they don't really understand that will long-term not have any value. So I've, in a lot of the conversations that I've had, really trying to stress, hey, you need to look out for your investors, even though we're not supposed to call them that. We need to create value mechanisms that have long-term value. So I'm not against utility tokens, and if you priced a product as a very simple example as just a token equals a per unit of service on a decentralized platform, perfect. The problem is that if the token price goes way up and market manipulators could certainly come in and do that, then it might outprice their platform versus competitors, and their product might not be competitive in the market. So it's one of the true just challenges that I've seen, and you know, there are other token structures you can do that maybe don't have those problems and do have a lot of value associated with them, but I'm just finding they're so hard to understand for people that I explain them to, no matter how much I try to simplify them. I've spoken at a bunch of broker-dealer conferences this year trying to educate people on everything that our industry is doing. And when I explain these topics to them, they just, I mean, the first problem is that broker-dealer industry is only just getting to Bitcoin. So they're not understanding any of that.
Sort of.
Sort of, that's exactly right. And so I think it's a huge challenge, and it's just looking at the complexity of it has really pushed my thinking into a stronger belief that security tokens are actually going to have a lot more traction. But I'm being very black and white when I say that, and obviously I think that some utility tokens will have success. I just think they're going to remain a niche product because they're so complex.
Chris, you want to?
I think the real issue is the security laws were written in 1933 and 1934. They are obsolete.
Yeah.
They are so out of date. They use, you know, it's like a horse and buggy on a maglev train. That's where we are. So the problem that you have is you've got an enterprise. Let's just look at Google. They were forced to go public. They got about 600 employees with stock options. The options had gone on long enough that they got exercised. They ended up with 600 shareholders. You get over a certain number of shareholders, you are automatically required to do a public offering. Now, maybe Google didn't want to do a public offering then. They had no choice. That's the law.
Yeah.
So the laws are not really suited for today's economy.
Yeah, that's absolutely right. I mean, I'll say this as a founder of 17 companies, many of those companies raised money with an expectation of an IPO, which I knew, even as I was raising the money, was never going to happen. And so everything about our financial modeling for fundraising versus trading needs sort of re-engineered. However, what is the thing, what would you say is the next step on that journey?
Well, I'm hoping that they can make some changes to these laws because, you know, they've got to lower the threshold. You know, this whole concept of KYC and AML, Grandma with $20 is not a money launderer, okay? Let's just get that out there.
What about Troll Grandma 1376?
Yeah, Troll Grandma 1376, you know, if it's called structuring, right? When you pile all these things together and someone ends up with $1 billion coming out over here magically, that's a structuring thing.
Yeah.
So that is money laundering. And but the fact is that, you know, when you hand in your KYC, just, you know, a little aside here, I got a letter, one of the exchanges I was on, they said, oh, I'm sorry, I'll just use the name as KYC Inc., which is the service provider. I'm sorry, we got broken into, and now someone's got your home address, passport scan, utility bill, blah, 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 blah. Every time you hand that stuff out, you lose privacy.
Right. So I think in wrapping it up today, because I think I'm getting the signal, I want to do one question from the audience. But first I'm going to say, I've been saying this for a couple of months now, I believe in 5 years, all securities will be digital. I think that everyone here would agree with that statement. But in 1 month, I cannot tell you what's going to happen. And that's one of the few times in my life where I've really not been able to see the sort of near field because there's just too much chaos and too much, sort of too many possibilities. Any questions from the audience before we wind up? One in the back.
I'm coming.
I picked the guy farthest away.
I know. I'm already hurting from last night. This helped me sweat out the tequila.
Hi, my name's Josh Berger. I'm with Mantle and Vault Logic. I hear what you're saying about security tokens for equity. What about, and for tokenizing, what about for revenue? What's your feeling on creating STOs around revenue for companies?
I like it. I actually think hybrids are going to be interesting. And just as an example, you know, instead of just issuing equity on a blockchain, doing a small rev share that is essentially a forced dividend could be really interesting. So I think that getting creative with these models so that they're more interesting for investors and they don't get crowded into like, why is this even tokenized? Because I could just sign a paper agreement on DocuSign. Like those are things to be thinking about.
You know, as a startup guy, I don't like those. And the reason why is because your path forward is so unpredictable that if I'm suddenly obligated to pay 10 or 15% of my revenue out to my security tokens holders, that scares the shit out of me because I just can't predict it that well.
It's a debt. That's basically what it is. It's a future obligation to pay, and like you said, it's uncertain. But investors like that because you can always go back to your investors and renegotiate. They like that too because then they have some leverage.
I'm going to say it's one of, I think, the many basket of instruments for entrepreneurs. I mean, this is the thing I learned the last 2 years from all this, which is that founders need money, and we have for too long lived in 1926, and it's time to grow up and get mature and evolve. So, thanks a lot, everybody.
Thank you. So well done. So well done. Bye, Titus. We'll miss you.